DVLT's headline says $2 billion. The filing says potential non-binding for tranches and conditions. That gap is today's proof test. I own DVLT shares, so assume I am biased. That is why today is not hype. It is a proof test. No buy, sell, hold, financial advice, or price target. Today, the DVLT Proof Box is testing three things: final agreements, first tranche closing, and usable cash. Here is what changed. Datavault announced a structured financing term sheet tied to a potential $2 billion transaction. The company says the structure is asset-backed, not a normal cash placement. That matters. In a normal cash placement, investors put cash into the company. In this structure, DVLT may issue shares in exchange for preferred units in a vehicle holding fixed income securities. The company says that collateral base could then support secured borrowing for its exchange and infrastructure plans. So the headline is not DVLT has $2 billion in the bank. The more accurate version is DVLT has a proposed path to build a collateral base that may support borrowing if the deal closes and lenders accept the structure. That is still important. It is just not the same thing as cash today. The bull case is real enough to track. If the transaction closes cleanly, DVLT could have a much bigger capital story. It could help fund San-Cutum, the Information Data Exchange, the International Elements Exchange, NYIX, and debt service needs. The release also says the counterparty's digital asset tokenization and blockchain infrastructure projects would route through Datavault's platform unless the parties agree otherwise. That is the strongest version of the story: capital access plus tokenization exclusivity plus infrastructure funding. But the filing is also very clear about the risk. The June 4th Form 8K says the term sheet is non-binding except for certain limited provisions. The potential transaction is expected to operate through 4 tranches of up to $500 million each. That means the full $2 billion number is not one guaranteed check. The closing checklist is long. The company still needs due diligence, definitive agreements, shareholder approval, regulatory approvals, possible CFIUS clearance, a charter amendment if required, a fairness opinion, payment of fees, and acceptance of an independent valuation of the preferred units. Those are not small footnotes. Those are the gates. There is also dilution and control risk. The company warned that the proposed issuance could represent more than 50% of current voting capital stock, and the transaction could involve change of control risk. That does not mean the deal is bad. It means the proof standard has to be higher than the headline. Here is the beginner concept: collateral is not cash. Think of collateral like a valuable property deed. It may help you get a loan, but it is not the same as money already in your checking account. A lender still has to accept the value, approve the loan, set terms, and send the proceeds. Collateral can open a door. Cash is what walks through it. That is why this episode matters for DVLT. The company can have a very large collateral story and still need proof that the collateral becomes usable financing, then operating investment, then revenue, then cash flow. Now ground this against the current financial base. In Q1 2026, Datavault reported about $3.4 million of total net revenue, about $111,000 of gross profit, about $2.2 million of cash and cash equivalents, and about $8.7 million of operating cash used. Those numbers do not kill the bull case. They explain why the financing proof matters so much. Here's today's DVLT Proof Box. Definitive agreement signed, not proven. First tranche closed, not proven. Secured borrowing facility available, not proven. Dilution and control terms protected, not proven. Cash reaching operations, not proven. What would make this more bullish? A signed definitive agreement, a clean first tranche close, lender-backed borrowing terms, transparent dilution math, and evidence that proceeds fund operations instead of only extending the story. What would make it weaker? More headline language without closing documents, delayed approvals, unclear valuation support, heavy dilution before operating proof, or no usable borrowing facility. My view for today, this is a serious potential financing path, not completed cash. The $2 billion headline belongs in the tracker, but the business value has to move through the gates. Tomorrow, I am tracking the $25 million payment because even a mostly non-binding term sheet can contain a binding cash risk item. Subscribe if you want the daily DVLT Proof Box, not hype, not price targets, just what changed, what is proven, and what still needs evidence. Not financial advice. Always do your own research.